Hey folks, welcome to the Rate Update with Dan Frio. I am Dan Frio, and this is your rate update video for the day. Well, actually, we're live here with Nico Grammarosa. We are going to talk today the good, the bad, the ugly, in regards to when you're looking to build a home, or if you're in the middle of building a home right now. So we usually start out these videos on the live events. We usually have a little bit of a delay on people joining us. So I'm just going to go through the itinerary right now that we plan on talking about, so you guys can be informed before you sign on that dotted line to build a house. So again, recap of the video. We're going to talk today on those that are in the process of building a house right now, those are thinking about building a house right now. And we're just going to show you our experience on what we've been seeing over the last 6 months in regards to that area. So what we're going to talk about right now is when you qualified. When did you qualify? That is one of the biggest issues that a lot of people are going to face. And we have people calling on a daily basis. They're freaking out. They're like, hey, we've been in the process of building a home for a year now. And, when we got qualified, and then the story goes from there. So what I want to talk about today is when you qualified, and then we have a dialogue that we're going to go through today. But the biggest thing I want to make sure you guys are aware of is when you qualified is much different time frame than today. Okay, so here's what happens in most of these. And we have probably 50 people in the process of building a house right now, and they're freaking out. Okay, so what happens is you signed on that dotted line about 6-8 months ago, and everything was basically stable. Rates were fantastic, and you got pre-approved with the builder's lender, and everything's good. You were at 299. That sounded fantastic. They pre-qualified you. You went over to the builder and said, I am ready to get going. So you started down that path of the building of the process, but in the time duration, you had labor shortages, we had supply chain issues, and you keep calling back the lender of the builder, that builder's home lender, and they're saying you cannot lock until we're about 35 to 40 days prior to closing. Okay, so they get notices from the builder what's going on. But the biggest dilemma is you signed the contract back when, got pre-approved at 299. Now the rate's 5.25. The first thing I want to ask you is, do you still qualify? Here's the frustration part that everybody's getting. They call the builder's lender, and the builder's lender is saying, there's nothing I can do. I can only lock you for 45 days prior to closing. So you're going to just have to live with it. But what hooks a lot of the people that are building a house, and if you're on here right now, this, is if you use their lender, they're going to give you 5, 6, 8, 10,000 in credits. Well, Nico has a story he's going to tell you about how those credits normally get eaten up by no fault of your own, and you don't get any benefits of it. Okay, so that's what we're going to address here shortly. But the biggest fear you guys have to have is, if you're working with the builder's lender, are you completely stuck using them? The answer to that equation is no. Okay, so here's what I have a little scenario, and then Nico's going to join in just in a bit to give you his story. But I have a gentleman that's closing in about a week. He locked back with us. He listened, and back in January when we locked him in, we got him 3.25. That rate, the rate was lower than that. And a lot of people were like, what? I don't want that higher rate. I'll just wait and see what the market has. All right, he's closing in about 2 weeks at 3.25. Today's rate's 5.25. He calls me daily thanking me. I'm glad I listened to you. A lot of people didn't, but we can't go back in history. So the biggest concern you should have when you're building a house with, you have the builder, and then you have the builder's lender. You do not have to stick with them. Okay, that's the first thing I want to tell you. Yes, you're getting a credit, but here it's basically a shell game that's being played in many of these cases. A lot of builders, I'm not saying the builders are bad. I'm not saying that. I'm not saying their lender is bad. They're in a bad situation. But why they don't allow you to extend lock is beyond me. The only reasonable answer I have on that is they don't know when you're going to close, and they have no idea, and they don't want to waste their time and money to lock you in on a rate that's, it might take the house 6 months to be built, 8 months to be built, a year to be built, a year and a half to be built. So what do you do? Okay, so that's the first thing we want to know. Then you got pre-approved at 2.99. Now you're at 5.25. Do you qualify? How much of a mortgage, how much of a differential in payment is that going to be? It can be substantial. I worked on one just this morning. The differential in the payment when they qualified versus now is $700 a month. It's a huge change. So be careful when you're working with the builder and the builder's lender. The one area that I want to address to you is a lot of the builders are getting scared right now. I just talked to a friend of mine who's on the board of directors of a huge builder. If I said the name, you'd know it, but I don't want to give out his name. And they're like, you know what? We just came out with a program that will allow all of our clients to lock on a six-month lock, and we're paying the cost for them. I don't know any other builder that's allowing that because they're all saying, you know, you got to wait till 30 days to close. So I would highly suggest you do something. Okay. So the goal today is to give you guys advice on what you do now if you're already in the middle of building. Okay. And then what you should do if you're thinking about building. Some of the points that we're going to give, and Nico has another suggestion here with Pulte Builders. He had some huge success this month with them, and I'll have he'll give his story here in a second. So if you're in the process of building right now, you're with the builder's lender, please call them and ask them if they can give you a longer duration lock. Ask them. They know. They work directly for the lender, usually, or the builder. They're usually an affiliate of the builder. They know what's going on behind the scenes. So ask them, how long is the builder telling you it's going to take to complete my construction? If they say they don't know, they're full of crap. They know. Okay, then we can at least drill down some kind of duration in there. Okay, what I would highly suggest you do is not wait for the 6 months from now when the house is going to be ready, to be at their mercy, because what they're doing. I also talked to a builder's lender. He says, here's what we're doing. And he says, it's pretty shitty. And I don't like it, but I'm at the mercy of my lender. They're waiting till the 30 days prior to close. They're coming back with you with a higher rate, higher fees, and they're gobbling up that whole credit that you're getting issued by the builder just because it's a shell game. Okay. And this isn't a conspiracy theory. I have facts. I've spoken with builders. I've spoken with the builders' lenders as a potential client. And I actually know a few people in there that's giving me the scoop. I'll say that way. So that's what's happening in many cases. So what I'd highly suggest you do is call us. Okay. At least kick the tires. Let us give you a quote for a 3-month, a 6-month, a 9-month. I'm not sure if we have a 1-year rate lock yet, but we're working on it. Okay, so that's what I would highly suggest you do if you're in the process now. If you're thinking about it and you're ready to, you're checking out model homes and you like the builder and you like all that other stuff, here's the point I want to give you in that scenario. Go to the builder and say, I love the house. I'd really like to sign on the dotted line. I greatly appreciate you guys giving me this $8,000 lender credit, but if you would, I would like to change my contract to read, I can use whatever lender I want. Why do you, as Mr. Builder, care? And they're going to respond by this. Well, we want to make sure that you qualify and that we make sure you qualify when the house is done and we close in time. Okay, well, let's turn the tables around right now. They got you. I won't say the word. They got you stuck. You kind of probably know what I was going to say. They got you stuck because what they're going to say is, I'm kind of losing my train of thought because I'm really passionate about this because I don't want you guys to get hosed. They're going to tell you, you know, we don't know when it's going to be done and all this other stuff. So what I was getting back at is when you're negotiating with the builder, please just ask them saying, I love this. I want to sign on the dotted line, but the one sticky point I got here is I don't want to use your lender. I don't want to be stuck using your lender. Have the builder call me. Have the builder rep call me. Have the builder reps check me out on Google. Have them check me out on the NMS. Anything they want to check out for me to make sure we have a valid approval. We have a rate extension lock, and we should have no problems. They're more than welcome to even correspond with us to let us know the time durations of when the things should be done, so we're all on the same page. Okay, so that's where I would highly suggest you do. Then the other piece of this puzzle is the lock. We have the lock durations, like I said, for we got 6 months, 8 months, and I think Nico gave us a thumbs up. We even have a 1-year rate lock right now. So here's how it works. And then I'll be starting asking questions, guys. So as soon as I'm done with this, we can start popping in and answering every question you guys have. But what I'd suggest you do is get an insurance policy on the rate lock. And here's what I mean. Take an extended rate lock just to be careful. That's your insurance policy. Okay. So if rates go up dramatically, you're locked in. You don't have anything to worry about. However, the first comment you might have is, well, wonder if rates stay the same or they drop. Okay, perfect. We can do one of two things. We can float you down to the current rate at that time, or if the lender we're with at that point will not allow it or doesn't give us the best terms in that proposal, we'll move you to another lender. Okay, it's truly as simple as that. We already have all of your information. Okay, so it's very easy for us to move you over. So let me just explain to you a little bit about how the approval process works so you get it. What you do is you apply online, like you probably did with us or the other lenders or the builder's lender. We take your data, okay, we pull your credit, we run you through two automated systems. One is Fannie Mae and the other is Freddie Mac. And if you haven't heard of them, they're not Fannie Mae, isn't the Fannie Mae Candy or whatever. They're the two biggest entities in the country that do almost 90% of the mortgages. It doesn't matter if you go to me, to Wells Fargo, to Quicken, to Guaranteed Rate, to whomever. We all use the same system. So that's why I tell people, if you've been approved somewhere, I can get you approved. It's the same system. Okay. So that's what we use. So now you're approved. So now the only concern you have is what's going to change in the duration of time from now till your house is done. Okay. That's going to be your credit. Your credit is going to change. Every mortgage lender that you use is going to need a credit report within 60, 90, maybe in some cases 120 days of you closing on the loan. So as we get closer and approach the closing date or when the builder is going to be done, we'll probably, or in most cases, we'll have to re-pull your credit. So don't go out and do anything stupid like buy a car, buy a boat, buy all this stuff, or start missing payments on something, because that can affect you in a big way. You're going to say, well, I've already been pre-approved. Yeah, back then. But you have to re-qualify. And that's where I'm getting at. Where a lot of people are going to get stuck is the debt ratio. Okay, here's what your debt ratio is. It's all your expenses on your credit report plus your proposed mortgage payment divided by your gross income. Well, the scenario I was just speaking with, the gentleman, if he did not lock with us, his payment would have been about $648 more than what he got pre-approved at. Well, let's say your debt ratio, in many cases, you can go up to 50%. Let's say at the time when he qualified at 2.99, his debt ratio is 49%. Well, now his rate is 5.25%, or would have been 5.25% if we didn't do the extended lock, and he would not have qualified. I can guarantee you he wouldn't have qualified. Okay. So what do? Well, there's nothing you can do. You can't go back and say, okay, I'm just going to make more money. That doesn't work. You might be able to pay off a few bills to drive down your debt ratio, but most people don't have that ability. You might be in the situation you just can't afford the house anymore and you don't qualify. I'm not being a fear monger. I'm just telling you the truth. Okay, so this is what we're trying to put you on the path of, is that you don't hit a brick wall 6 or 8 months or a year down the road from now. Okay, because you don't know, I don't know, and the builder doesn't know when specifically the house is going to be done. Okay, so that's my kind of game plan for you when you're in the process of building. But again, let's recap the newbies out there that are kicking the tires to build a house. God bless you, build a house. You know, you're probably going to get a jump in value right when you buy the house from the time you sign the contract and it's done, but do it diligently and financially prudent. Okay, so again, what are rates going to be from now? Well, I didn't think we were going to go from 3 to 5% in 60 days. Can it happen again? It can. Do I expect it to happen again? I don't, but we don't know. So why not take out basically insurance policy, lock in your rate for an extended term. If rates go down, you get the lower rate. If rates go up, you're locked in at that rate. So please, guys, start asking any questions that you have in regards to building the house. And you can even ask other questions. If it's just related to interest rates, if you have a loan estimate from a lender right now and you want us to look at it and review it and see what we can do, love to do that as well. But there's a whole bunch of things we can do in the background. But Nico, tell them kind of the success you had with Pulte in the transaction. I think you already closed it, or it's closing maybe Monday, on how you were able to get the credits moved over, the appraisal moved over, and the whole ball of wax. It's pretty cool.
Correct. Yeah. So the client started with Plote's lender. Client moved over with us. We were able to get him a better interest rate, save him on some fees and whatnot. Luckily, Plody actually was still going to give him the builder credit as long as we closed on Monday. They actually had the appraisal done already, so we were able to get the appraisal transferred over to us, so that we are the lender on that appraisal, get it into underwriting, and we're closing on Monday, and the client's still getting those builder credits. So again, kind of what Dan touched on earlier is definitely look into what your lender will allow you to do and what type of people they are too, because I mean, look at Plody, they honored the guy's credits, our client's credits, and he's happy, our client's happy, and they're happy. So
Yeah.
it was
And
awesome.
we're not here builder bashing.
No,
We're just telling you these are things you need to do to protect yourself. They're doing what they need to do to protect themselves. They're not trying to screw you over. They're just trying to do everything and anything they can to, they don't want you to lose you as a buyer. Okay. Because then they have the reluctancy of, is somebody else going to buy this house? Most likely somebody else is going to buy that house and the builder can sell it at a higher price. But they don't want that worry either, because they might have an inventory of, 1,000, 2,000, 3,000 homes that if all those people walk out, now they have a glut of homes that it's sitting there and it's costing them on a monthly basis. So that's that piece of the equation. Lock durations, Nico, what are you thinking on locks? We do have a 1-year lock now.
yeah, we do. Obviously the rate's not that great. Are better,
But it could be a great rate 6 months from now.
Exactly. I have lot of clients that that I talked to February, March, maybe even January, going over 6-month rate lock options, even up to 210-day lock options. And then the rate was still a little higher, because the longer you extend that rate, the little higher the rate's going to get, right? Clients didn't lock in, and now they came back to me now. So let's just say a couple months ago, we could have got 4.25 on the extended rate. Now, unfortunately, we're looking maybe around 4.99, maybe up into the 5.25. So again, I know the rates might not be as attractive, but again, like Dan said, if rates do come down, we'll get you that better market rate, and you're not going to miss out on kind of what happened to our previous clients.
Yeah, they're not attractive in regards to what the rate is at this second, but they could be truly attractive 6 months from now. So
right,
again,
exactly.
the gentleman that I have, the gentleman.
I just wanted to clarify.
Yeah, the gentleman closing shortly, he thought at that time he's at 3.25, and it was like, dude, we can't blow this lock because we're gonna blow the lock, and then you cannot. In most of these cases, you can extend the rate lock 2 times, but it does get costly. But it's not as costly as what it would be if you didn't lock in. So I'm not trying to, guys. I'm not really trying to fearmonger. I'm just giving you the advice. If you do it, fine. If you don't do it, I mean, it's at least we're out here trying to do what we do to inform you in regards to that. So if you guys have any questions, please feel free. Thursday night, I'm sorry we're doing this back to back. I've been trying to add Thirsty Thursdays in for realtors, but most of the clients that are popping in on a basis of Thursdays are just consumers. We had a couple this past Thursday that were realtors that we're connecting with. But please, if you have any questions, start posting them, because the video is, for you guys out there to ask, and so we can inform you in the facts behind the questions that you have. So in regards to rates right now, you should be following my Mortgage News Daily Report each morning. Please sign up for down below in the description section. You can sign up for the newsletters, so you get a newsletter every morning, what's going on, and then check out the videos on every morning, the news update. I call it the rate update, but my morning update is basically just the news and how that is affecting mortgage rates. Nico, anything?
Sure. I can give them the story on our recent client that came over from a builder as well.
Sure. It's a different one from the one that's closing Monday?
Yeah, this is the one we just submitted last week.
Okay.
Client came over from the builder. The builder was offering him, it was an FHA loan, offering him, I think, a 5.25 interest rate, but it was a $6,000 in lender charges. So we were able to get him switched over to us, get him locked in with the 6-month rate. I think it might have been 6 or 3 months. I'm not sure. But we got him in at a 4.25 for 1/4 of a point. and we still saved him costs on all the lender costs and other fees. He was getting a small builder credit of about $5,000, but because all the other lender fees were so high, it was there was nothing there. The credit was eaten up by all the big fees. So again, he was able to switch with us, get a way lower rate, a full point better, and I think he's still saving about $2,000 moving with us, and he's not getting the builder credit.
That's nuts.
Yeah,
it's just nuts, and that's just proof. Let me put it this way, guys. If you're out there and you have a loan estimate from your builder, please email it to us. I'll give you Nico's down below in the banner. I'll give you Nico's information. You can email it to him. He'll review that, get back with you. But like I said, like he just said, the scenario, and guys, these are real life things. We could probably post the loan estimates, theirs and ours, on one of my morning videos, but I'll gray out the areas of the names and so forth because I don't want to get sued. But these are facts. I'm not sitting here, blowing smoke. It's the reality behind this stuff. It's the builder it's a great builder, but the lender that they're using, they're stuck, and they have to use their rate sheets and their everything. And again, in most cases, the builder and the lender they're affiliated. They're probably one team, and so they're just swishing money back and forth.
Most of the time, the title company too.
Yeah. So let's get a question. We got the first question. What time is the Thirsty Thursday? It is at 7:00 on Thursday, Central Standard Time, PM. And that's usually our biggest event. We have a flood of people coming in on Thursdays because it's just good timing. Saturday, especially in the summer, I'm probably going to switch this one. Who wants to sit and talk about mortgages or watch mortgage stuff on a
besides you and I
morning? That you got soccer, you got this, you got swimming, you got everything else, fishing and everything else, than to sit here and listen to us. But if you have any questions, please post those. But the agenda today was just to educate and inform you guys in regards to if you're building a home. We do have rate locks up to 1 year, so that's fantastic. So just to protect yourself, you have to look at it this way. You're not locked in. You're not sold or done with that transaction until you sign on the dotted line. What we're trying to offer you is at least an option or an insurance policy to say, hey, if rates go up, you're protected. If rates go down, we'll move you or switch you to a different program to make sure we capture that lower rate. Okay, so that's that. So please, if anybody has any comments, this is my biggest fear. My kids are like, why do you always seem nervous before you do your updates or your live events? Because I was like, I never know if anybody's going to comment. I used to be on radio, and the radio show, I did it for 13 years. It would flood in comments. But when I come on here, it's like, is anybody going to comment? Some people probably don't want their name posted across the bottom. If you don't, please just put in the comments. I see your comment before I post it over. Please, just let me know saying, hey, Dan, ask the question. But, if you would, please don't post this because I don't want people to see my name or whatever. I'll be more than happy to do this. I'll just read your comment and move forward. But that's that piece of the equation. One of the things is, let me just explain to you guys some of the issues or frequently asked questions that we had this week. Somebody says, I have a X amount score and I'm looking at this and that and this and that. Would you recommend an FHA loan versus a conventional loan? So let me just go down that avenue while people are still thinking and logging in possibly, and to explain to you the differences, the pros and the cons in regards to FHA versus conventional. So the biggest factors there is, I'll give you the pros. The pros for an FHA over a conventional loan, I'll do it in that aspect, is FHA is a fantastic program if you have low scores. Now, I didn't say you had bad credit. You might just have some student loans, a car or two loans, and a couple credit cards. And there are high balances, and your credit score is just not there. What we do is we analyze what would be better for you, because the biggest con with FHA are these two things. One, they charge you an upfront fee of 1.75% of the loan amount. Okay, that's one, and it's financed into the loan. Two, if you don't put down 10% or more when you're purchasing the property, you have what's called PMI. Well, the unfortunate part about FHA is when you have the PMI on the loan, it's on there forever. It's on there until you refinance. So if you never refinance in 30 years, which I don't know if has ever happened to somebody, but if you've never refinanced, you're going to have that on there forever. Okay. That's the biggest con. But when you have a credit score of say 620 to possibly 660, and you're only putting down maybe 3.5% or 5%, most likely you're going to have a better opportunity or better terms if and when you would go with an FHA loan. Now, sometimes you're forced into an FHA loan because if your credit score is 620 or below, that's the only option. Or you have a foreclosure that's under 7 years old, that then you have to go to the FHA program. And the other piece of the puzzle, if you had a bankruptcy within the last, what's the conforming loan for bankruptcies?
Conforming, I think, is 7.
7?
Or is that foreclosure?
Foreclosure. So the bankruptcies,
4.
I think 4. I think they changed it to 4, where the FHA is 3 or something like that. So sorry, I wasn't really going to talk about this topic today, but those are the pros and cons of that. So let's go to Brandon or Nico. You want to do the Brandon question? You can pop it up on the screen if you want.
It just say, hey Dan, what's the guy's channel that you did the recession video on from yesterday? I'm not sure if he has a channel. He has a website that you would have to subscribe to. Correct, Dan?
Yeah. Yes. So that's one of the subscriptions we subscribe to. It's $300 a month. So when things come out that I think are very important to you, if you're a mortgage lender, he's probably the way to go, because he gives you a lot of updates and it's real time. But for the average person out there or a realtor, what I try to do is I try to take all the subscriptions that I do on a monthly basis, and there's a lot. We probably spend at least $1,000 a month for me to be informed on all this stuff, so then I can inform you, I can inform my staff and everybody else. But his name is Barry Habib. I'll try to put the link down to his system down below, so if you want to try that out. But if there's anything there, I use a different system than his. I use his for a lot of the tracking, but I use a live MBS live for my live because it is instantaneously. Here's what a lot of this does for us. But I won't ramble on. His name is Barry Habib. I've been following him for probably 20 years, and he sends us as mortgage advisors. He'll send out alerts like, hey, here's what's going on in the market. I would highly suggest you lock, and so forth. I'll go down this avenue, how this works. Okay, so how it works with the MBS markets. MBS market is basically the biggest component of your mortgage rate. Okay, the yield on that MBS. So we are tapped into the live subscription on what the MBS market is doing. So think of it as a stock ticker. But you have a stock ticker that's about 5-10 minutes in front of the markets. Okay, believe it or not, that exists even in the stock market. You can spend about $10,000 a month and get a ticker that is faster and gives more information before the public gets it. It's a pretty shitty system, but if you're wealthy, you know it. But sorry about my vocabulary. So what happens here is this ticker, it basically informs me about 10 minutes ahead of the banks moving their interest rates. So when I see the MBS market crash, that means rates are going up. I yell out to everybody, dude, lock. And I email our whole staff, lock them, because I know the market's crashing. So for example, let's say stock starts to crash. I'll know it about 5 minutes ahead of time. I don't, because I don't have the stock ticker, but I would know it 10 minutes ahead of time before you, and I already start dumping. Well, believe it or not, the bigwigs on Wall Street, they do have that. I just learned that about 6 months ago, and it pretty much ticked me off. How it's legal, I don't know, but they got more money than I do. So Nico, next one.
Yes, sir.
You want to click? Do you have the ability to click it so it goes live?
Let me see.
I'll click it, and then you can go ahead and take it.
Yeah, go ahead. Hey, Dan, I heard they suspended down payment assistance programs. Is that in every state or just AZ? We still have down payment assistance programs available. If you're in Arizona, some of the programs you might be talking about are like local or county programs. Might be those, but we still have national programs that are still available in every state. So we still have programs available for Arizona. Again, that just might be a county or a state program.
Yeah, good call. I've gotten this question quite a bit in the past couple of days. Here, what's happening is there's also lenders that are folding up. believe it or not. We have lenders that have been pulling locks on us. They're saying this lock is no longer valid. Thank God we have over 130 lenders that we work with, so we can scramble and move it quick. We have a lot of lenders that are coming back saying we will not do any extended locks anymore. We won't even extend any locks that are in there. I don't mean the extended lock program. I'm just saying if you blow your lock, there's lenders that will saying, too bad, you got to relock at current prices. That is scary. But the how the down payment assistance program works, there's tons of them. There's nationals, there's county ones, there's state ones like Illinois. We're in Illinois. They have IDA. Pretty good program. But the problem is next week, what I'll do on Thursday, I'm going to do the down payment assistance program. We'll do that and we'll fresh up on that to give you guys some feedback on that. The good, the bad, the ugly, the really terrible. A lot of these I would not recommend. I say again, I would not recommend them because there's a lot of caveats there they're pretty bad. But there are a few out there that are really good. It's basically free money and you can take it. Some of them have come with higher rates. So what you could do is we could close you into that program, get you established there, have you make a couple payments with that program, and then switch you out, refinance you out of that to the lower rate, and you got that money basically for free. So those are a lot of the approaches that we take here because we're on your side. Okay, we want the longevity of it to be financially prudent for you guys. So thanks for that question, but we will do a video Thirsty Thursdays. Check us out. I'll do the thumbnail and everything and post it today, later this afternoon with the Thirsty Thursday. This weekend or this next week will be in regards to the down payment assistance programs out there. Let's go to the next one. You go ahead and read them and then I'll back you up on them if that's okay.
You got it. Would you be able to work with a smaller builder in Oklahoma to offer rate locks? Yes. Let me just check one thing. So we can work with any builders, big, small. The only thing I want to check is since we just moved over to being a broker, we still are waiting on a few licensing with states to reapprove our license with our new company. And unfortunately, Oklahoma is one of the licenses that's still pending right now.
You know what we can do, Nico? Here's what we can do on that one. If you would, reach out to Nico on Monday, if you would, or you can email him in the email down below. We have we're part of the largest mortgage brokerage in the country. So we have affiliates, or I'll say other branches that would be licensed in Oklahoma for you that we can refer you over to them. So what I'm working on right now is the licensing piece. It's really tricky. We moved over from a bank to a broker, and I had to update all my licensing. So we're in the process of doing that. Plus my branch has to get licensed. I am also working on plan B to be able to get have a system where I'm licensed throughout the whole country pretty easily. And I'm working on that as a plan B. I hope to know on that within the next week or two. So I might have some great news for you guys coming up on that front. But yeah, still please reach out to us in the areas that even if we're not in, we'll help you find an internal branch of ours that could help you.
Yeah, and we can at least give you guys some advice. Even if we're not licensed in there right now, definitely refer you to one of our other guys in that state that is licensed. But we can definitely review your loan estimate for you. Quick glance, give you some helpful, tricks and tips.
Absolutely. Next one is, do you have an app on? We don't. You know what? I don't know how hard. Go ahead. I'm sorry.
We have a little app. It's through our online application. It's just some mortgage calculators and our online application. It's nothing special.
Yeah, I would highly suggest just go to therateupdate.com. Everything's there. At the top right, you can subscribe or you can apply. We have a chat button. Honestly, it's me and Nico and one of other gentlemen in our office that replies to all those chats. So it is one of us. Now you can put a face with a chat bot. But we would love to help you on that website. We just added a few things on there. One of the biggest things that a lot of people have questions about is their credit score. They're like, we had Thursday, we really dove into credit scores. And I think that was probably our biggest responses ever of doing these YouTube lives. And we drove down that path. But a lot of people are concerned. They're like, when we talk to them, it's like, I really don't want you running my credit because you're going to ding my credit scores and so forth. There's a link down below. You can actually pull your own credit. And believe it or not, if you pull your own credit, there's no hit as a credit pull to your scores because you're pulling it. If I pull it, you might have a hit. It might be a couple points. I cannot determine how much it would be hit. But if you look down in the description below, we just added that. We also added a join button. If you're a realtor or mortgage advisor out there, I would highly suggest you click on that. We're going to do Zoom lives probably at least once every other week. And if it builds up pretty big, we'll do Zoom events where everybody can meet each other. There are going to be realtors in there, as well as consumers. We can link you guys together. So if you're in an area and you're like, hey, I really like to buy in this area, but I don't know what to do, we can help you with the financing, plus buy a realtor in there to help you find a property. But great question. But I would highly suggest right now, I'll look into seeing how we can make it an app. I tried that before and it was really complex and really costly, but I'm sure over the last year, probably that prices went down. So that one.
All right. In November 2018, construction loan at 5.25%, 7,000 closing costs. Then in March of 2020, refinanced at 3%, $3,000 cost. And finally, in September of 2021, refinanced at 2 1/8. Thanks to you, Dan, 4,000 closing costs.
Bam! So we have a success story. Thanks, Brandon. So you can see how we're on your side here, guys. You know, if you follow my advice, I am wrong. I posted a video yesterday morning. I was wrong on some areas. I have no problem coming out and saying, guys, I botched that one. I was wrong. What I didn't foresee is the Russian invasion, and that caused a huge havoc in the supply chain still. And one of the areas that I'm studying this right now, because I love economics and all that stuff, wait till wheat prices start to really skyrocket because of the Russian situation, the Russian-Ukraine war. Russia is probably the biggest exporter of wheat, which I didn't know. And you're going to start seeing wheat prices dramatically skyrocketing. And that's going to flow over to beef and just a bunch of other things. So you think the housing market is that those prices have gone up. Look at the percentage change, and because it's a house valued at 300, 400, 600,000, whatever, you see that change more robustly than you do in a steak or whatever. But even used cars are up 40% last year in price. So you don't see it really on the sticker piece of things, but as a percentage of it, there's some huge moves. And there's some major moves coming in regards to a lot of inflation numbers. So I missed it, but I didn't anticipate the Russian-Ukraine war. Honestly, I thought the supply chain with a lot of other people was gradually going to fix itself, as well as the labor markets. And it's still not happening, and I can't put a beat on it, guys. But I greatly appreciate that. Brandon Brooks, you betcha, man. I greatly appreciate you guys watching in coming and posting here. So let's go to the next one.
If I'm in contract already with my builder and lender and decide I want to cancel because I can't get permits for another 2 months and my house won't be built on time, what can I do?
That's a great question. We had that Thursday. This is why you get an attorney. A lot of times, think of it in a transaction. I was always reluctant to get an attorney. I'm like, what can they do that I can't do? I'm in the mortgage business. This is where they come into play. Think of them as an insurance policy. If something goes, oops, what's your legal rights? I actually have a guy putting in some floors for me in Florida today. And I spoke with him the other day, right before I left. And here's his scenario, and it's pretty bad. He bought his house 6 years ago from a gentleman on contract, meaning he bought it directly from the seller. The guy, let's say the guy owned the house and my guy wanted to buy it. So the guy held the financing. The house was free and clear, and he financed it through the guy who initially owned the house. Well, he's been paying for 6 years, and why he didn't get a mortgage, he had some credit issues. He got divorced and some other things. The gentleman, the guy he was buying it from, I hope you follow me, and here I get it, but when I speak it, sometimes it doesn't come out right. The guy he was buying it from passed. Now the guy's wife gets the contract, and she nullifies the contract. And in the contract, on one of the last pages, it says if he ever passes away, that the contract is null and void. I would never, ever, ever, ever have anyone sign that contract, because that just happened. Now this guy, the house is up for sale for somebody else. It's about $150,000 more than he was buying it under contract. He's stuck. As soon as it sells, he's got to get out. And he completely renovated the home. Pretty shitty situation. So those are areas where, get an attorney. I am looking into this. I should have asked Mike this morning. I was talking to a buddy of mine he's on the board of a huge builder. I should ask him what the clauses are in there because he would know. But I would suggest you get an attorney involved in that to review all the fine prints of that. I don't want to tell you one way or another, but try to go through your contract with a fine tooth comb, see what's there. I will do my due diligence because you are now the second person that asked this question in regards to that. And I will get back with you. If you want to email me, I can find or send you my findings, or email Nico. His description's down below. He will also look into it. And between him and I, will get back with you within the next, probably give us till Monday or Tuesday to let you know what we found out and what the repercussions could possibly be. But that's a great question that I never thought of, because you might be in the position of, dude, I just can't afford this anymore. What happens if you can't afford it anymore? You don't qualify anymore. Will you get your money back? That's an area where I don't know. And a lot of people are going to be facing that. All right. So great question.
I think that was just following up from his previous stuff.
Got it. Okay.
Do you guys do cash out refis, planning to buy another house, new construction as investment? Yes, of course we do.
Yeah. Don't say it that way. He's right. Yes, that's what we do. So here's actually, Nico, I think you have, or I think it's one of the guys in the office has one. The guy's refinancing 3 properties to pull out all the cash in those to buy a property for cash. Sure. So you can refinance. Yes, you're allowed to refinance any properties you want. Pull that cash out. Use the equity in the current homes. Just think of it this way. That's a great idea. If you're comfortable buying in this market. I'm not saying it's a great idea or a bad idea. It's up to you guys. If you're planning on keeping the property for a long duration of time, I can almost assure you it's going to work. Okay. If you have to sell the house within, between now and 5 years, I wouldn't be a proponent of being a home buyer at this point. Okay. I wouldn't. So you have it on record. Don't say Dan Frio is pushing more, homes on everybody. I'm saying it here live. I'll even look into the mirror. If you plan on getting a house and selling it within 3 years, I wouldn't buy the house. Okay. So for the record,
we do just to add on, depending on what type of house you're cashing out on, we do have investor products right now that are pretty easy to get done. Dscr loans, which you can also do for cash outs.
Explain that, what Dscr is and how, a lot of people get stuck. They have, 10, 15 homes, believe it or not, a lot of people do. And they're like, I just have no finance options anymore. Or I just don't debt ratio, because when you add up all my, when you have real estate, especially investment real estate, there's a lot of tax benefits. One huge thing is you get depreciation. You can depreciate that property, and it's a huge piece. You might be able to depreciate a property $10,000, $15,000 in 1 year. That automatically, if you got $15,000 in rents coming in and you have a $15,000 depreciation, that means you have 0 tax consequences. Okay, so that excludes a lot of people from being able to finance investment properties. But Nico, tell them all the specifics on the DSCR.
Yeah. So again, kind of like how Dan said, usually investors, or when you're going to buy an investment property, we have to get into your tax returns, all your tax bills, all that stuff, right? And we actually have to use what you reported on your tax returns for the rental income. With this product, it's going to use the rent schedule. So when there's appraisal done, they're going to get a rent schedule, also the lease. So as long as this lease or rent schedule payment comes back either the same as the current mortgage payment or $1 more, that's all they're going to qualify on. As long as that rent comes back more than the current mortgage payment, you're good to go. Depending if you're a first-time investor or not, you can get this done with 15 to 20% down, and usually need about 3 months reserves. So again, like Dan said, if you're maxed out with all your conventional loans, you have 10 conventional loans, you want to buy more, this is another easy way to get these done. So real quickly, also the nice thing about these products is, let's say you want to do a cash out on one of your investments to purchase another one, you can do them simultaneously and get them done almost on the same day. Yeah. Where compared to a conventional or standard loan, that wouldn't be possible.
Yeah. And it's just, think of it. If you have 5 rental properties, 6 rental properties, you go to refinance, it's a nightmare. Okay. Because we need your federal taxes. And then Schedule C, we go through all that piece of things. But then on every property you have, we need to get a copy of your mortgage statement to see if it includes taxes and insurance. Then we have to pull a tax bill. Then we have to get your homeowner's insurance. Then we have to do profit and loss statements for every property you have. It's a nightmare. When people come in and they have 10, 15 properties, we all scramble. Who wants this one? It's hard. But the DSCR program basically is that house just stands alone on its own. And it is really simple. And how it's not blowing up with popularity, I don't know. But as more and more people learn about it, it's a fantastic program. And the rates are, well, especially in the rate run that we had recently, they're not that much worse than where rates are anyways.
No.
Okay. So, but thank you so much for that question. And we got thank yous and thank yous and thank yous. So we're coming up on 45 minutes. If you have a last minute post, please post them. But if you're late to the party and you joined us, we talked about if you're in the process of building a house or thinking about building a house. So the recap is, if you're in the process right now and the house is going to be done within 30, 60 days, you probably already contracted with your lender and locked in or whatever, please send me that loan estimate. Okay. It's not too late. You can switch. Okay. Nico's information is down below in the scroll bar. Email him your loan estimate. Okay. Here's why. He just quoted a loan for somebody the other day that was, we were able to offer them 1 full % lower than their builder. And even with the lender or the credits the builder was giving them for the financing, we were able to blow that away. So just because the mortgage lender they're working with is good, and the builder is giving you credits, doesn't mean that you're stuck with that lender. Please shoot us your loan estimate. The email's right scrolling down below. Let us review it. We'll get back with you Monday afternoon and say, God bless you. You know what? You got a fantastic program. You did the job. You did good. Or we might come back and say, how about if we save you 1% on your rate, save you about $2,000 in cost, even over and above what they were offering you? Would you be interested? And you have the ability to do so. You are not locked in. You didn't sell your soul to that lender at that time. So great question. Any more questions out there? If you're out there, please subscribe. For those that are kicking the tires and saying, I would really like to build, but I'm hearing all these horror stories, please don't be concerned. If you watched my video last night, it was a post. It was about a 38-minute video. Please, I highly suggest you go back to that. There is reprieve coming, and it's been 60 years of testing, 60 years of study, of recessions and everything else. You're going to find it very informative in that area. But we also then recapped, if you're working with the builder and you're ready to sign to get them started, you got pre-qualified. If you've got pre-qualified, we can get you pre-qualified. Okay, I'll just say it that way. But reach out to us. Let's see if we can put you on a 6-month or a 1-year lock, so you know what the cap rate is. So basically, we're going to come back. Let's say the market right now is 5%. We might offer you 5.5% on that long-term lock. And you're going to say, Dan, why would I do that? Well, people were asking the same thing back in January when we were quoting this as well. We locked people in at 3.25 when the rates were 2.99, and they're like, I'm going to trust you on this. Now they're calling us, thanking us, because the current rate's 5.25. So we have several people closing in the next 30 days that are locked in a range of about 3 to, I'll say, 3.5. And if they would not have, they're probably looking at right now 5 and 5.5. So they are very thankful to us, and I'm thankful for them for listening. So if you have any comments, if you're here for, you're looking for some questions in regards to you're building a house, you're in the middle of building a house, or you're proposing to build a house, let us know. We'd love to answer those questions. If you guys are done for the day, we can leave it at that. If you have any mortgage questions, specifically, can we do this, or can we do that, or can you do this? One of the areas I want to look at too is I'm researching this just for you guys, and this is off topic a little bit, but there is the fraud in the mortgage business is huge. Okay, one of the things I'm going to look into, because I just had a client call me with a horror story. he actually had somebody file a quitclaim deed against his house that he owned free and clear, and now they own his house. So he's investigating, and he'll be okay, but it's a lot of legal work, a lot of things. There is a deed protection program. I'm not selling this to you. I'm just advising you guys on this, that you can subscribe to a system that'll protect your deed. Basically what it is this. Here's how easy it is. I shouldn't even say it. Here's how easy it is to take ownership of somebody's home. Somebody has a house free and clear, even if they don't have a house free and clear. You can fill out a quitclaim deed, get it notarized, take it to the county, get it recorded for $30, and now you are vested as an owner in that property. It scares the bejesus out of me. I have this system. And again, this isn't an infomercial, but I want you guys to be aware of the good, the bad, the ugly when it comes to real estate. And we talk here about financing specifically, but I also want you to be protected. So I'm going to try to find a link for you guys that I can add down below. But down below in the description, let me just give you a highlight of what we put down there. Again, this is the infomercial part of me until you guys start asking some questions. We just had a system in there that you can pull your own credit. It's going to cost you maybe about $30. You don't have to pull all 3 repositories, but at least you can pull your credit, see what your credit is. There's no hits to your credit score for that. Okay. There's a newsletter subscription. There's an insurance. We just kind of partnered up with an insurance company to give you quotes. Why did we do that? Well, I kick the tires for you. I kiss a lot of these frogs on your behalf. I was able to contact this insurance company. Again, the link's down below. They were able to offer me or save me $2,000 on a bundle for my home. And I was with Allstate. Allstate's commercials says switch and change. I switched. I changed. What was what's their logo thing? Switch or call and switch and save a lot of money. I called and switched from them, and I'm saving a lot of money. So that is it for Saturday morning. We're coming up on 1 hour. I greatly appreciate you guys. There was only a couple people online today. Brandon, Lawrence, Tim, Ariel. Thank you guys. Please, if you guys would, start sharing my videos with people. Send out these quotes. I can guarantee if you have these questions, there's a couple 100,000 people right behind you that has the same questions and concerns. Nico, anything you want to conclude with?
Yeah, no, we're just here to help you guys out. Not trying to switch you guys over from the builder's lender. Like Dan said, if you're getting a good deal with them, we're going to be the first people to tell you that. We're just out here to make sure you guys are getting good deals and understand what the mortgage process is and what goes into it. So, and we're just to be resources here too, as well. So once you close, that's not just it. You guys can reach out to us. We actually stay in contact with our clients. Yeah, guys, we're here to help.
Yep. Great question. So thanks, guys. Have a wonderful, I just talked to my wife in Florida. It's 80 down there and sunny. I'm in Illinois. It was snowing here. I haven't been outside yet, but it looks windy as hell. So I got to go out and do some yard work and go do some groceries. So, hold on. Do we have any questions? That is it. Thank you guys so much for being here. God bless. Have a great weekend, and I'll see you Monday morning.
See you guys
later.